right, so this is a master class, and then we are going straight into this class. So this is top-down analysis. I'm going to explain it to us the most effective way to execute or to do top-down analysis. Okay, the first thing that you need to know, we have two things that you need to have. The first one is you need to know the kind of trader you are, and secondly, you need to have a strategy. The reason for that is top-down analysis in itself is not a strategy, it's a system of analyzing the chart. All right, you see that analyzing chart itself is not a strategy. All right, you are analyzing chart to find out a entry point. Do you get it? So top-down analysis in itself is not a strategy. Please don't mix it up. Okay, you need to have a strategy, all right, before you cannot go for top-down analysis. So I'm going to be explaining to us in details how you can do top-down analysis effectively, and then I'll be using a strategy as an example. Then the first thing I said you must have is you must know the kind of trader you are. If you do not know the kind of trader you are, you will be frustrated, okay? Because it is important that you know the type of trader you are. So now, if you are a scalper, all right, your top-down analysis time frame will start from 15 minutes, all right, and then you make entry on 1 minute. That means you need to know the kind of trader you are. If you do not know these things, what will happen is you will start analyzing from maybe daily, and then 4 hours and 1 hour and 30 minutes, and you won't even know your entry time frame. All right, so you can be confused in such a way that for 1 hour it is buying, all right, for 30 minutes it is selling, for 15 minutes it is buying, for 5 minutes it is selling. You are confused because you don't know the basic things about top-down analysis. So like I said, you need to know the kind of trader you are. So if you are a scalper, your analysis must start from 15 minutes, and then you make your decision whether to buy or sell on 1 minute time frame. If you are a day trader, you will start from 4 hours. As you can see here, you start from 4 hours. That's your analysis. You analyze whatever you want to analyze on 4 hours, and then you make your entry on 15-minute time frame. That's a day trader. Okay. And then if you're a swing trader, you will start from weekly, and then you make your entry on what, on 4 hours time frame. Do you get that? So that is the first one. Now the second one that I mentioned is you need to have a strategy. So in this top-down analysis, I'll be using support and resistance as our strategy, all right, as our entry point to make decisions for either buy or sell. All right, that's the strategy. And then our confirmations will be W pattern. That means anytime we see W pattern, all right, so the kind of traders I'll be using as example for this top-down analysis is a day trader. Okay, so we are going to be analyzing on 4 hours, and we are going to be making entries on 15 minutes. Okay, so I will start marking the zones for support and resistance on 4 hours, while on 15 minutes we'll be making our entries for buy or sell. So the confirmations, like I said, that means the things that we are going to be looking at for to make our entry for buy or sell. If we do not see these things, we are not going to make entry for buy or sell. All right, as you all know, that is not all the time that support and resistance zone holds. Okay, so now the strategy support and resistance. The confirmation will be looking for W patterns, and then we'll be looking to enter at the reversal of the W patterns. Very simple, those two confirmations. Okay, so at the end of the video you can watch it again, and then you can add more confirmations to it to make it a very strong signal that has high success rate. So like I said, as a day trader, we analyze on 4 hours. You see that it's going to be very simple now. All right, so we go to 4 hours. All right, so I'm going to zoom out so that I can easily see my zones. Okay, so I'm going to start marking my zones now. I have picked the rectangular tools. Okay, so I'm going to mark the zone. So I'll just quickly change this guy to red because we have it in blue now. So I'm changing it to red right now. All right, good. So now I'm going to mark the other zones that I have on the floor here. Okay, so simply all I'm doing is I'm just marking my zones. All right, as you can see in my chart, I'm just marking the zones. Okay, so that is another zone. All right, now if you look at it from here, we cannot actually make any entry here. All right, so what I'm going to do is I will look at for the recent zones. I will look at for the recent zones. Okay, these are the recent zone. Okay, do you see that? And then I can decide to increase this guy a bit. All right, look at it again. So I'm just simply marking the zones. Look at it from here to here is another another zone. Can you see that? That's another zone. And then from here to here is another zone. Now you need to know I'm actually using a strategy to mark out my zone. I'm not just marking points whereby I see two tops and two bottoms. No, what I'm using is look at this, look at my chart very well. If you see my chart, if you look at the chart very well, you will realize that there are vertical lines on my chart. Those vertical lines are day separator. All right. So what I'm simply doing is I'm simply marking the top and the bottom of the previous day. That's what I'm doing. Look at this for an example. This was the previous day and this is the present day. All right, this was the previous day, this is the present day. So like I'm not just marking zones. Look at this. If you realize I didn't mark this, all right, I didn't mark this as a zone, that I marked this as a zone, and then when price got to this level, I'm going to say no, that's not what I'm doing. All right, so you need to know those things when you want to mark your support and resistance. And the higher your time frame, all right, the stronger that zone is most likely going to hold. Okay, so using this as an example now, all right, using this as an example, do you see that? Do you see that? Sorry, let me just quickly mark the other zone that I mistakenly deleted. Okay, let me check that again. All right, so this is it, this is it. So this is the zone here. Okay, so now what I want to do is um I'm going to mark another zone. All right, I'm going to mark another zone quickly, and then we'll go to 15-minute time frame to check our entry. I mean, this thing is all over here. This thing is all over here. Look at this one. Look at this one. This is a zone in itself. All right, this is another zone, because your success begins from knowing how to draw your support and resistance. Do you get? So there are some people that they draw support and resistance, yet they end up losing in the forex market or in trading synthetic. All right, look at this. This is your zone. Like I said, I am marking from one vertical line to another vertical line. I am not marking two zones in a day. Do you get? I'm not marking two zones in a day. All right, if you just use this, I believe that you are going to have changes in your what trading. So right now that I've marked my zone, okay, right now that I've marked my zone, all right, so I'll just quickly go now and use one as an example. So I'm going to use this here as an example. This where my cursor is, I will use it as my example. Okay, so let's assume that, all right, I mark from this present day, I mark from this present day, okay, and then this candlestick has not happened, has not shown. Okay, so and then I extend this guy to this level. Okay, I extend this guy to this level, but let's assume that this guy has not shown. So what is going to happen is immediately this trend, all right, begins to come down to the zone and touch my red zone, and begin to print candlestick inside the red zone. Immediately what I would do is I will now go to 15-minute time frame to go look for my entries. Remember, what are we looking at for? We are looking for W pattern, and then the second confirmation is we'll be making entry at the reversal of that W pattern. All right, now if you do not understand W pattern, okay, there's a video, all right, on this playlist. Just go check it. W pattern, you are going to see, you are going to see it. Okay, so now this is the zone, this is the zone here, this is the point whereby we have the candlestick enter into the zone here, as you can see here. Okay, so now I want to zoom in so that we can see the charts correctly. So now look at it. What are we looking at for? We are looking at for what? For W pattern. Okay, we are looking at for W pattern. And in this trade, okay, in this trade, where can you see W pattern? All right, it is very, very clear, very, very clear. This is our W pattern here. Look at it. This is our W pattern here. All right, the candlestick print down, went up, came down, and then went to the upside. All right, and then I said that we are going to be making entry for buy at the reversal point. This is the reversal point here. All right, it got to this level, came down, and then went to the upside. So this is where we'll be looking at to make our entry for a buy. Do you get? Now look at this W pattern. This W pattern cannot be denied. All right, but look at this one here. This is not even a W pattern. This one is not a W. If you are seeing a W pattern here, I don't know. You need to really, I don't know what to say actually. All right, but this is a W pattern. All right, so that means you need to be very, very patient and true to yourself. Okay, when you are trading, if you are going to use this strategy, for your trading. Okay, you need to see a W pattern. As you, even a 12-year-old boy or girl can see that this is a W from where my cursor is down to this level, up to this level, down to this level, and up to this level. Do you get? So don't complex your trading. All right, if you don't see it, don't force it. Do you get? So now, like I said, at the reversal, as you can see, when this guy began to come down, all right, on this W level, when it began to come down, all right, our entry point definitely is just going to be, let me just quickly, now let's add our moving average. All right, let's add the moving average. So I'm going to add, where is it? Okay, moving average. All right, I also talk about moving average. Okay, so you can check the video as well. Okay, so let's add our moving average. Good. Let me, this guy is, okay, sorry guys. Good. Okay, now, so we have it, but I don't think, okay, let me change the color of the moving average. All right, let me quickly change it to blue. Okay, so now we have our moving average, which is going to be a second confirmation for us. All right, a second confirmation for us. So now we can see the W pattern, right? We can see the W pattern. So this is the W pattern as I explained earlier. All right, this is a W pattern. And what happens when the price, all right, okay, went up, all right, to show and form our W pattern, all right, as you can see here, what happens? All right, you actually move above what? Above the 27 moving average. So two things, you can decide that, okay, I'm going to buy, all right, immediately the candle stick forms on top of the moving averages, like here. That is going to be my entry, and then my stop loss is going to be at the bottom of this candle here. All right, at the bottom of this candle here. So that means you are entering when the candlestick forms on top of the 27 moving averages, and then your stop loss is going to be what? Below the recent low. All right, or you can wait for the retest. All right, that means you are waiting for the retest on the moving average, and immediately you see the retest on the moving average in a way like this. So what are you going to do? You are going to make your entry for a buy. So you can actually be making your second entry on this level. All right, you make your entry for a buy here, and then your what? Your stop loss below the recent low of the candlestick. Do you get? So W pattern is for buying, while M pattern is for what? Selling. Do you see that? Very simple. However, if you go to 4 hours time frame, this W pattern, all right, that we actually see on 4 hours time frame, all right, actually formed. Okay, can you see? Actually formed. Do you see that? It formed. Okay, now if you are going to buy using the 4 hours time frame, let's say you are buying here using the same strategy, that when the candlestick forms above what, the 27 moving averages, you place your entry for a buy. All right, if you are going to do that, that means you need to use a very small lot size if your capital is small. All right, and you need to wait for a long period of time. Do you get? So if you are entering on 4 hours, that means that you are not a day trader again. Do you get it? You are now a swing trader. So you'll be holding your trade for maybe 1 week, 2 weeks, 3 weeks, or even 4 weeks, or even 2 months. Do you get it? Aha. So as you can see here, this price came down, went up, came down, and moved to the upside. So that's a W pattern. So if you are entering here, that means you need to have a very good amount of profit that is going to still keep you in the market when the price came down to this side before it moved to the upside. Do you get? But as a day trader, just like I explained, using your 15-minute time frame for entry, all right, with my previous explanation, you will be able to have sniper entry. Even if you have small amount of capital, in your trading account, you will be able to make huge profits, all right, before a day trader will even get into the market, because this 4 hour time frame. All right, so why a swing trader is still waiting for this candle, for this bullish candlestick to form. All right, for this bullish candlestick to form, you have entered the market at this level here. Do you get it? You have entered the market at this level here, and then you ride it up to the upside. All right, so that is how to do top-down analysis. Do you get, guys? So two things I want to quickly recap now. You need to have two things. First one, you need to know the kind of trader you are. When you know the kind of trader you are, um you will not be confused about where you will start your analysis from. That's the time frame. Then secondly, you need to have a strategy, and I just show you a strategy right now. All right, using support and resistance W pattern, then retest on the 27 moving averages. If you do these two things, know the kind of trader you are, start from the right time frame, there won't be confusion. You won't have confusion of a situation whereby on a time frame it is buying, on the other time frame it is selling. As you can see, for my analysis, we started on 4 hours. On 4 hours, what was it doing? It's telling us to buy. Do you see that? It's telling us to buy. Just like I explained to you, the same W pattern is telling us to buy. On what? On 15-minute time frame. What's it doing? What's it doing on 15-minute time frame? All right. The same W pattern formation. What's it doing? Look at it here. What's it doing? It's telling us to buy. Do you get? But when you don't know these things, what will happen is you will have the challenge, the headache, and the confusion of where to start, all right, and where to end. Do you get? So a scalper start from 15 minutes, make his analysis on 15 minutes, execute on 1 minute, all right, and then a day trader start his analysis on 4 hours, execute on 15 minutes. Do you get? And then a swing trader start on weekly and then make his entry on what? 4 hours time frame. Do you understand it now? So that is top-down analysis. So you use it alongside with the strategy that you have in the market. And if you do not have any strategy, you can maximize the one I shared with you in this video using support and resistance. Very easy, very simple, without deceiving yourself. When you wait to see the W pattern, all right, and then you use the confirmation of retest on the 27 moving averages, you will be profitable in the market. If you do not deceive yourself trying to enter when you have not seen a W pattern, do you get? All right, because if you have tried to enter here, when the price enter, because there are some people that just believe that immediately price enter into the zone, all right, it will go up. All right, what will happen is you would have lost when price actually pushed down below the zone. Do you get? That's why many people have the challenges of, oh, when I was trying to buy, the market take me out, and then after that the market began to go in my favor. Do you see that? That thing can actually be frustrating. All right, so if you take this lesson from this video, that experience and that feeling is going to stop forever and ever. All right, so this is the proper way to do top-down analysis. Know the kind of trader you are. When you know the kind of trader you are, you will know the time frame to start your analysis, and you will know the time frame to make your entry. Then secondly, you need to have a strategy, a working strategy. All right, so your strategy needs to have confirmation. So I just showed you one here. If you are going to use this, make sure that you back test. All right, don't just listen to this video and then begin to use it automatically. Go and back test, because it's possible that you miss one or two things from my explanation. So when you listen to it again and then you back test and you have a question and you come back to the video, you begin to see some of those things that you missed in the video. So guys, I love you so much. Let's wait for the next video. All right, and let's learn together to make profit in the market. Thank you so much.